on this edition of Next Africa. Setting up for a big play, the continent's sports economy is dishing out opportunities, and basketball is looking for its investment move. We hear from NBA Africa CEO Clare Akamanzi on the league's growing ambition. Plus, as institutional investors increasingly turn their eyes to Africa's booming sports and entertainment markets, we speak with Ibrahim Sagna, executive chairman of Silverbacks Holdings, about how changing ownership rules could open up new pools of capital for various leagues.
These changes that the NBA is proposing is going to make the market bigger, will provide path for predictable income, and basically more institutional capital will probably show up.
And why the combination of demographics and technology makes Africa ripe for investment, according to Helios founder Tope Lawani. Welcome to Next Africa. I'm Jennifer Zapasaja. The global sports economy is rapidly expanding, with Africa predicted to be among the fastest growing regions in the world. Take basketball. From Hakeem Olajuwon to Joel Embiid, for decades the continent has produced show-stopping talent who frequently go on to play in the West. Well, now the NBA is doubling down on its efforts to grow the game across the continent, with plans to expand its regional league, homegrown talent, and start selling more franchises. Speaking at the Bloomberg Philanthropies Global Forum, NBA Commissioner Adam Silver said he sees a major opportunity to build the sport on the continent.
Around Africa, for example, I would say that's one continent where they have not experienced the level of sport investment as other places in the world. But on the other hand, I mean, it's just an amazing data point that the UN is estimating in just 25 years from now, 40% of the young people in the world will live in Africa.
Right.
And so we see as the NBA an amazing opportunity.
NBA Africa CEO Clare Akamanzi echoed a similar sentiment when we sat down. Akamanzi said the league's vision goes far beyond what happens on the court.
The goal is to catalyze economic development using sports and basketball in particular. And so if we are going to catalyze economic development, then we have to look at the whole ecosystem, which is beyond the court. So the court is where action takes place, but the court has very few players that are going to be playing on that court. Look at the NBA, only 500 players on the NBA in the whole world. And so the very best will go to the NBA because it's the elite league that we have. But the goal is to also develop those other opportunities that come with investment in basketball. So there is the league, NBM, there's the BAL. We have, you can play professionally in the BAL. But there's so many jobs and opportunities around all of that. From, if you're a data analyst, if you're a marketing, expert, if you're a technology expert, if you're into AI, if you're into hospitality, restaurants, security, transportation, all those industries thrive when the league thrives. And so this is where we've seen real impact. We've seen in the first 4 years of BL being in existence, we've seen close to 40,000 jobs being created. We've seen $250 million worth of GDP in just the first 4 years playing in 4 countries. Imagine how much more we are going to do, because we are going to do it. It's not if or maybe, we're actually going to do it. Imagine how much more we're going to do when we play in 10 countries, 12 countries, 20 countries. It's going to be a huge, powerful platform for job creation, economic development, and dreams for those who want to play professionally.
How do you get there? That's ambitious.
Yes, it's ambitious, but I think the first 5 years of the BL has shown that it's possible. The first 5 years for me was a very powerful proof of concept. In the first 5 years of NBA investing in the Basketball Africa League in Africa, we've shown, that when you build infrastructure, they can be utilized well. So let's build more infrastructure, because today we estimate only about 5 countries have arenas that can actually host the NBA standard games. Let's build more of those. That is the work that we have to do. Building an arena is capital intensive. It requires investors. It requires governments to work with us. But since we've done it in some countries, let's do it in other countries. It's also going to require more success stories being shared on what's possible, like Come and Malwaj, so the girls and boys in school can actually tap into the potential and talent they have to make this happen. But for me, the first thing is really developing the infrastructure, because the infrastructure is what is going to open up all of this, as we've seen in countries like Senegal, South Africa, Rwanda, where jobs are being created because of Basketball Africa League.
Are you eyeing certain markets then for that expansion? Of course, we've talked about the infrastructure part of it and how critical that is. Not all countries, of course, have arenas at this point. What is NBA Africa eyeing, at least in the near term, to expand?
So first of all, we think the potential is in many countries of the African continent. But we see a momentum growing in South Africa. We've been going to play there a couple of times. The media market and the purchasing power in South Africa is quite strong, and we think that's something that can allow entertainment to be consumed. We see talent in Senegal. We see it in Nigeria. We see
as far as players?
As far as players, but also the economies consuming. We don't have an arena in Nigeria, but we know that the day we have an arena in Nigeria, it's going to be a whole different game story. We have an arena in Senegal. We have good talent in Senegal. Angola. Angola is the only country in sub-Saharan Africa that has actually won a championship of BAL. Wow. Angola they have the arenas. They have a very strong basketball culture. They've been a champion, but they've also gone to semifinals almost every year. So you can see from the basketball angle, but also from the fandom angle, they're very strong. North African countries are very strong as well. Egypt has won championship for the BAL twice. Libya just won, a team from Libya. Before that, we had Tunisia. And then in East Africa, we see Rwanda and Kenya really, coming. Rwanda has invested a lot in the sports city. We like to give it as an example because it has all the infrastructure. And it has brought its talent from a very low base, and now they finished third, which is something that you wouldn't have imagined 5 years ago. Kenya has a lot of potential as well. We have teams being invested in. I just think that today, the potential and momentum we see is at an all-time high. We haven't seen this before, and I think the future is just going to get better.
Are any of those near-term expansion plans, or are they a little bit further out? Some of these countries you were just mentioning there.
So we are working on that already now. Nairobi, Kenya, for example, had their first team last year during the BAL. Before that, they had never had a team in the BAL. And so these are terms that these are plans that we're actually already implementing. And as we go into the future, we actually hope to see more countries really come up with teams that will be playing in the league.
And you called it a startup, or was a startup. Is it still a startup?
So we started during COVID, and then it's 5 years. But already when you see the growth, on YouTube last year, we had about, close to 4 million people watching the games on YouTube. And other than Africa, we had a lot of people watching from the US. The US is one of the markets that we actually have people watching our games through our NBA app. We've had, in terms of people that attend the games in arenas, yes, the arenas are only 4. We wish we could play in 10, 12, and we'll get there. But even with that, we've seen the number of people that go to watch games from year one grow from 45,000 to 140,000 in less than 4 years.
Still ahead, institutional investors are turning their eyes to Africa's fast-growing sports and entertainment markets. We speak to Ibrahim Sagna, executive chairman of Silverbacks Holdings, on the challenges and opportunities for investors and what's next for sports franchising across the continent. Welcome back to Next Africa. I'm Jennifer Zabasaja in Johannesburg. The business of sports in Africa is gaining momentum, driven by rising audiences, global partnerships, and a wave of major events across the continent. According to Oliver Wyman, Africa's sports market is already worth more than $12 billion and could exceed $20 billion by 2035. And with major events like AFCON and the Cricket World Cup on the horizon, that growth could accelerate even faster. And as more capital flows into various corners of sports and entertainment, investors are exploring new models, including sports franchising, that could capture more momentum. Ibrahim Sagna, executive chairman of Silverbacks Holdings, is one of them. Here's what he told us.
Tech, sports, entertainment, and fashion became we focused our lens on, because what we wanted to do was follow a simple idea that we take very seriously, which is that with the advent of technology today, there are businesses based in the African continent that will demonstrate the capability to capture growing pools of foreign-based revenues. And that's true in technology. If you look at the fintech sectors, you have a lot of businesses that capture such stream of income because of remittances. If you look at as well entertainment, you have a lot of movies made in Nigeria that basically are produced in local currency or in South Africa, but they sell the movie to Netflix and collect the proceeds in dollars. So in fashion, the same. A lot of designers on the continent sell in Neiman Marcus and across a lot of retailers overseas and collect foreign income. In the case of sport, the same has proven true with the arrival of the NBA. And when they came, the team that were selected after the establishment of NBA Africa were able to participate in a tournament called BAL, where each of the participation fees were denominated in dollars. And that allowed us to take a keen interest and take an investment position in a team in South Africa. But we've also expanded that beyond basketball in also fighting leagues in Nigeria, whereby the same is true. There are some fights in the African continent. However, the content is consumed by a lot of people in the US and in Latin America, especially Brazil.
So it sounds like this could potentially be a benefit for at least basketball. I think if we look at some of the other sports, though, that you're invested in, as you were mentioning there, if they don't have an NBA behind them, could this still ultimately be beneficial for the African sports ecosystem in your mind?
For us as an investor, this is a good development because the continent needs these types of platform to come in and provide recurring income. So if you look at the NBA at large, it's one of these global leagues that basically provides recurring income to 30 teams, which are franchise over there. But the same is true with the NFL, the Hockey League, and two other leagues. In essence, if you wanted to look at American major leagues, like families, each league is a massive family that have a set amount of children. And each children gets 7 to 10 years of pre-agreed revenue that emanate from either the media right or sometimes a complement that comes from a salary cap. So that allows an investor such as ourselves to come into a situation where you get a clear visibility on future revenue. And that's what makes institutional capital highly attracted to such propositions. So what the NBA is preparing to do on the continent will enable more predictability for these properties in terms of revenue.
What can you tell us about your average return on some of these investments that you've made, at least in sports right now?
So in sports, we cannot speak of returns so far. Our company, as you know, started this journey in technology. We've started investing in 2019. Probably 80% of our portfolio is in technology, most dominantly in technology, fintech. And there, if you want to see the difference in technology, our return are 8 times cash after 9 exits, which is an IRR of 60%. And what we've been able to, how we've been able to do it is by starting an emerging fund managers program where we're backing 9 fund managers, boldly look at and try to find the best performing companies that meet our investment criteria. And then we graduate them into our direct portfolio. So our single largest investment behind one company is in fintech. It's a company called Move, where we've put well over 30 million in that company alone. When you now compare that to sports, we still have not put to work more than $2 million in a single sports company. So I would say that the days of getting returns from sport properties. We're still very early days, but a few institutional investors like ourselves have started putting a small amount of capital and hoping that these changes that the NBA is proposing is going to make the market bigger, will provide path for predictable income, and basically more institutional capital will probably show up.
Up next, Africa-focused private equity firm Helios Investment Partners has been making big bets on the continent for more than 2 decades. Founder and managing partner Tope Lawani explains where he's finding opportunity amid Africa's shifting investment landscape. That's coming up on Next Africa.
Sometimes in Africa, we really underrate what we have. And it's time we look at ourselves, like I want to do more on this continent. It's time they pay sports attention on this continent. I think we have to be aggressive.
Masai Ujiri, former Toronto Raptors president and co-founder of Giants of Africa, is calling on governments and investors to give sports the attention it deserves, as he sees the creative industries as a medium to create opportunities and jobs for Africa's youth. Masai has been instrumental in growing the game across the continent, from hosting youth basketball camps to developing state-of-the-art facilities that nurture the next generation of African talent. He's partnered with Helios Investment Partners, one of Africa's largest private equity firms, to create Zaria Group, which is building sports and entertainment infrastructure across the continent. Helios established its sports and entertainment group back in 2021 and has also invested in NBA Africa and PFL Africa. But beyond sports, the PE firm is known for major investments in Helios Towers, Vivo Energy, and Fari, which are among its most notable exits. I spoke with Tope Lawani, founder and managing partner of Helios Investment Partners, about where he's finding opportunity amid Africa's shifting investment landscape.
I think that this is a very exciting time for private equity investing in Africa for a couple of reasons. I think what I would say is that the increasing interest in Africa derives from 2 sources. I think you've got push factors and you've got pull factors. I think on the push side, in the 15 or 12 or 13 years between 2010, the global financial crisis, and a couple of years ago, you had real outperformance in US and European private equity, but, substantially all of that outperformance was due to, falling interest rates, which of course made debt, more available and cheaper. And also, with declining discount rates, valuation multiples were going ever higher. So now with that era somewhat behind us, or I think obviously behind us, investors are now interested in markets that are first uncorrelated to the markets of the United States and Western Europe, and where the underlying rates of growth are just stronger. And so naturally that leads to markets, Africa, for example, being, prime amongst them. In recent years, India has been capturing a lot of interest, but as the relationship between India and the United States seems to be fraying, a lot more interest is actually being diverted towards the African market. So what we see is growing investor interest in Africa. And on the pull side of it, in terms of the attractiveness of the African market, first of all, as you know, we have extremely interesting and exciting demographics, which, create sort of a good baseload of underlying growth. And we have the trend of urbanization as well, which drives productivity increases. Now, you might argue that neither of those 2 things are new. They've been happening for quite some time, and they'll happen for a bit long, for more than the rest of our lifetimes. But what is really new, actually, is technology, and this overlay of technology on the demographics and urbanization trend is really having profound impact across many, many industries in Africa. It's lowering the cost of doing business. You look at financial services, for example, where rather than building bank branches and, having people queue up at counters, all of the transactions and savings can happen on the mobile phone. So costs are coming down, addressable markets are growing, and you're really seeing the investable universe for private equity expanding quite dramatically. So that's what excites us. We invest at the intersection of demographics and urbanization trend on the one hand, and technology and innovation on the other hand. So within that space, that overlapping space, we see huge amounts of opportunity, and we're extremely excited.
Do you think, Tope, though, that there needs to be more development of the secondary markets across the continent in order for, I know Helios is an Africa-focused firm, but for other firms to look at some of the opportunities here, especially in comparison to what they could potentially get in developed markets? The way we view our role in private equity, certainly in Africa, is our job is to actually identify opportunities, create, put businesses around them, create, strong, well-governed, growing, cash-generative businesses, and hand them over to the, to the rightful owner, which is usually the public markets or strategic investors, strategic buyers. And so when we look at the history of our firm over the last 20 years that we've been doing this, I would say probably 50% of our exits have been to strategic buyers, global multinationals. And about 40% has been, in public markets. We've listed businesses on the Nigerian Stock Exchange, the Kenyan Stock Exchange in Nairobi, the Egyptian Stock Exchange. But on the other hand, we've also exited 3 businesses on the London Stock Exchange, being the larger, more geographically diversified companies. So the development of a secondary market, is a sign of a maturing market, but we don't think it's necessarily the sign of a healthy market. And so we're quite happy with the quality of exits that we have and the transitionary role that we play as providers of capital, know-how, and value add to build really high-quality businesses. Are you expecting more exits in the near term? I know you can't divulge too much, but what can you tell us? Yeah. We are. In fact, we just in the last couple of weeks signed an agreement to sell one of our businesses actually in Nigeria, a very large business, for a meaningful amount of capital. It's been quite a successful investment for us. It's in the energy transition gas infrastructure space, which is a space that we continue to believe in, although for various reasons, strategic reasons, we have opted to no longer invest in that sector. But we're very proud of that investment. It's created a real champion, and we think it's got a lot of scope to expand, not just within the Nigerian borders, but also across the West African region. So I imagine that's on the horizon then for Helios, potentially to go back into Nigeria? Absolutely. We've got an excellent pipeline now, but pretty full pipeline actually of investment opportunities. Nigeria is let's say punching at its weight in that pipeline, but also other places. I mentioned the investment we just made in Egypt in the data center space. We've actually just signed another investment, which is I believe in the public domain, to acquire the largest exporter of frozen strawberries, from that country. Interestingly enough, Egypt is actually the largest exporter globally of frozen strawberries. This company in particular is the leading player in that space. And in a world where there's a lot of concern about tariffs and trade barriers, we think from a pure comparative advantage standpoint, that business, stacks up very well. So we're excited about Egypt. Morocco, we've been quite busy in Morocco over the last several years. That remains a very interesting market, as does Kenya, which you alluded to earlier. And that's Next Africa for this month. But don't forget our weekly podcast for more of what's happening across the continent, available on Apple, Spotify, and wherever you usually get your podcasts. You can also subscribe to our bi-weekly Next Africa newsletter, available on the terminal and website for even more reporting from the Bloomberg team. I'm Jennifer Zabasaja in Johannesburg. We'll see you next time.